In this video, I'm going to share how you could potentially save £100,000 in tax by taking a year-long holiday. My name is Joshua Tharby. I'm a chartered tax advisor and I work with clients globally to legally reduce their taxes and build wealth. In this video, we're going to run through how becoming non-resident for just one tax year could potentially slash your income tax bill by a significant amount. Make sure you watch to the end so you don't miss out on any key takeaways. So save £100,000 a year in tax by taking a long holiday. Pretty bold statement, right? But this is exactly what we achieved for a client that we literally just set up out here in Dubai last week. So when we're talking about relocating to Dubai, I know we mentioned there's a lot of anti-avoidance rules. You've got the 5-year rule. We're going to jump straight into this actually, because this is the kind of main point that you've got to plan for. You've got a 5-year anti-avoidance rule. When you have anything over, as soon as you move overseas, you start taking dividends, lump sum pension payments, capital gains. These are the main 3 income streams that are caught by this. And essentially, any of that income that accrued whilst you're a UK resident, you've got to be out of the UK for 5 full tax years to get any form of tax advantage. We'll square that one up straight away. But if you become non-resident and you're earning fresh cash flow, is what we like to call it. It's called post-departure profits is the technical term. So say, for instance, you're an online coach. You've got £1 million sitting in your business bank account right now. And you say, Josh, I want to come to Dubai for 1 year, take that $1 million out tax-free, and then come back to the UK. I will say, that cannot work. You will be impacted by the 5-year rules. If you want that £1 million tax-free, you have to stay out of the UK for 5 full tax years. If not, when you come back, you will basically have a massive tax bill equivalent to you taking that £1 million dividend as soon as you return in the UK. So you don't want to be doing that at all. If you are taking large amounts of dividends, then you need to make sure that you are out of the UK for 5 years. Now, I was speaking to another client actually this week about how, well, you don't need to be in Dubai for those full 5 tax years. So you need to be outside of the UK. Absolutely, we know that. Tick that one off. And then we need to look secondly at what country are you resident in when you took that £1 million of dividends. In this case, Dubai is the easy one, the UAE, tax-free, no income tax on dividends, so it's easy to work with. Now, as long as you receive that 1 million dividends tax-free in that year, you're then completely free for the next 4 years to go anywhere in the world because you don't have any income. It's all on pretty much everywhere in the world is on a tax year basis. So you could actually quite easily go become resident in Spain, where they've got higher taxes in the UK in most regards, because you've actually paid the tax in that last tax year, where you paid the tax on that 1 mil dividend at 0%. Now, that's a very clever strategy for those people that do have the large retained earnings that do want to take it out, but you've got to remember you can't go back to the UK for 5 years. Now, that's not what we're aiming to cover in this video. That was just a kind of side point there. We're talking about how you can become non-resident for just one tax year and take a large dividend out, but from fresh profits. So if you're an online agency, you've got £1 million cash in the bank, but you said, Josh, I don't want to stay outside the UK for 5 years, but we are making £50,000 a month net profit, and I don't need to be in the UK. It's all done online. Our team's all remote, all along the world. But you know what? I feel like taking a year traveling. I don't want to be in the UK. I don't need to do it. I've not got to do too much work. What tax opportunities are there around this? And this is the whole point of this video, how you could save £100,000 a year. In this case, a lot more, by being non-resident for just one tax year by taking a year-long holiday. And the trick here is ultimately to base yourself somewhere overseas for that 1 year period. It could be Dubai, or actually a lot of clients become complete nomads. So they actually just do genuinely travel the world 2 to 3 months at a time. And because they genuinely are non-resident, they make sure that they fully understand their UK ties in the UK tax position. Of course, if you've not got a company set up and you're not working full-time overseas, you probably have to spend less time in the UK than that 90 days. It might be 45, depending on your number of ties. But assuming that you're happy to tick that box, spend no more than 45 or so days in the UK, you won't be UK tax resident. And as a result, any dividends that you earn in that tax year, HMRC have no right to tax you on. You can then receive that money to your current account, just as you usually would. But as a matter of fact, you wouldn't pay any income tax on that whatsoever. The main thing to watch out for is making sure that it's all post-departure profits. There's no dividends paid out of earnings that were there before you became non-resident. And you can actually do this, leave on the 6th of April, come back on the 5th of April the next year. And what you've got to do there is have a year-long holiday at the expense of the taxman. So if you are making £250,000 a year in taking that out in income, where actually you will save in excess of £100,000 of income tax on those numbers alone. And if you change the numbers, if you do £500,000, £1 million, it literally just becomes an absolute no-brainer if you're in a fortunate enough position where you can work remotely, you can run your business from a laptop, and you can travel the world at the taxman's expense. If you want to find out more about this, click that link below, book a consultation where we'll run through your personal tax position, help you understand the statutory residency test, how you can become non-resident, and exactly how much tax you can save. And that's all for today, guys. I hope you found this video useful. Please do remember to smash that thumbs up button and that subscribe button. See you next week.